All right, guys, we're wrapping up another week 7 in my options trader challenge, where I'm looking to get a 50% return on my money this year. I'm a new options trader who started back in October of 2023. And so just want to take you along my journey, see how well I can do with options, and is it worth it for you to do options? So I want to show you how I did last week and where I'm at on the year, and something I learned this week that's going to increase my profits with less money. All right, let's run the numbers real quick. Week 7 recap. We have $17,543 in net liquidation. That's the overall account value. Premium collected this week was $244 with a return of 0.94%. Year to date, that puts me at $1,520 increase in net liquidation. My premium total collected on the year is $1,157, and my percent return is 9.49%. which I'm looking to turn that into a 50% return by the end of the year. So I made 2 moves this week. I collected $100. You can see here, $1 credit for my AI roll that I did. So we can see here on 2/12, as the beginning of the week, I decided to roll my 28 put down to a 27 put and collect $100. Earnings is coming up for AI. I decided to do an earnings roll and collect more money, dropping my strike price down by $1. So that was a really good move. Instead of cashing out, I decided to go ahead and roll it further and collect more money. It was a really good trade. The next move I made this week was I closed my position on SoFi. I did an $8 put, pretty close to the money, and I decided to go ahead and close that for 7 cents. And let's see what I collected here. A total of $50, and I did 1 roll. So in a matter, I started that trade at the beginning of the month. I was able to make $50 with about $900 of capital. And so for my position in Palantir, I've totally closed all my positions. I am now out of all of Palantir. I had a lot of different positions in there, $17.50 calls, $18 calls, and I had a $19 call that I finally got assigned this weekend. And I'll show you what I'm doing with a new strategy that I've adopted. So I found a way to continue selling puts, but using less buying power and being able to choose any price stock that I want. See, before I was stuck with lower price stocks because I didn't have a whole lot of capital. I'm trading with a $16,000 account. So that would limit me to any stocks under $170. But I found a way that I can reduce my buying power and I can pick any stock that I want. I can trade things like Nvidia, Tesla, Apple, Google, you name it. And I can also potentially increase my return on every trade. So let's take a look at it. I had to open up another account on my TastyTrade. So I had a cash account at first, and then I realized that I needed a margin account to be able to do what's called a put spread. So if you don't know what a put spread is, it's basically the same thing as selling a put, but you're buying a put at a lower strike price, and that offsets and protects your buying power. So you're basically buying coverage to a certain degree, and you're able to reduce your buying power because your brokerage is going to accept that as a buying power offset. So for 1, you can control your losses, and for 2, you're able to shop around for any stock that you want. So you can see here, I've got 3 positions open. I've got Shopify, Tesla, and Uber. All of these are what's called a vertical put spread. So they're all on the same expiration date. We see here February 23rd. I've got 4 contracts, and 1 put that I'm selling is at $73, and then I bought some puts at $68. So you can see here, I'm selling a put just like I normally would at $73, but I'm adding protection at $68. So my risk is only between the spread of these strike prices. That's why they call it a spread, between $68 and $73, where before my risk was $7,300. Now it's the difference between 73 and 68. So let's take a look at how the market did overall last week. We can see it started out pretty rocky, and we had some economic data that came out, and it took the market for a spin. We did see a pretty good recovery. So we're, again, still seeing strength here, but the prices overall flattened out. We did see a new high at the beginning of the week of $503.50. So what's this mean for the week ahead? Well, it's hard to say. I mean, are we going to stay flat? I mean, we did stay above the 8 EMA, so it dipped below and then it came back up. So that's a good sign of strength. But we're seeing the slope start to change here, right? So it's starting to flatten out here. We're forming a base. I think the market really needs to digest basically the economic data that was received last week, but we are seeing some flattening out on this slope. We could see a base forming here and then a continued push up, depending on, you know, how the market responds to other events that happen in the future. But right now we're above the 80 MA, so that's a good sign, a sign of continued strength here. So I think we'll continue to see prices trend up. So that's week 7 in the books. We'll see what week 8 has in store for us, especially with my put spread trading strategy that I've just adopted. Again, if you're interested in following me on my journey to a 50% return by the end of the year, feel free to like this video and subscribe for more.